So today's question is, what is an ETF? Now let's start with defining the term ETF. What does that stand for? ETF stands for Exchange Traded Fund. Now what this means is a fund or security that is traded on the stock exchange. An ETF differs from a stock in the fact that it contains multiple securities under one ticker symbol. These securities could be stocks, commodities, or bonds, a collection of them. ETFs often track indexes. An index is a standardized performance tracker for an exchange, and they do this by following the value of certain securities within that exchange. An example of an index might be the S&P 500 or the Dow. Along with indexes, with ETFs you can also track industry sectors or invest in specific industry sectors. If that description was a bit difficult and you're more of a visual learner, I have an analogy for you. Here I have a bowl of precious metals. Now each precious metal in here is a different metal, right? Some of them may go up in value, some of them may go down in value, but together, on average, they swing at a more conservative rate. In this analogy, the metals are stocks, but if I wanted to throw in a few precious stones in there, like gems, diamonds, that would be like adding bonds. It's adding more security and more diversity. In other words, apes together strong. Some examples of really popular ETFs include ticker symbol SPY or SPY and ticker symbol QQQ. Now the SPY tracks the S&P 500 index, which is 500 large and mid-cap stocks on the US market. This, on average, since its inception, has gained 10% per year. QQQ, on the other hand, tracks the NASDAQ 100 index. It is very, very tech heavy, so therefore it swings a bit more, but on average, for the past 10 years, it has returned 20% annually. To be brief, one of the main reasons why people invest in ETFs over stocks is that there's more security. There's less risk when you invest in multiple companies at the same time than investing in just one that may swing wildly. ETFs are less volatile, so they're basically there for those with a lower risk tolerance. Before I end this video, I want to say that if you're trading to get the rush that you would get when you YOLO your life savings on a GameStop stunk, then ETFs probably aren't the thing for you. And I guess maybe I'm a bit biased as the ETF Chad, but if you want those gains, go with ETFs.